Do you know you can legally pay less tax as an employee in the UK? Welcome to the world of tax savings, a landscape often overlooked but rich with opportunities to keep more of your hard-earned money in your pocket. Understanding tax laws and benefits in the UK isn't just a chore for accountants. It's a crucial skill that can help you navigate your financial journey with confidence and ease. We're here to take a deep dive into this topic, breaking down complex terms and concepts into digestible pieces. We'll explore tax codes, tax-free allowances, reliefs, benefits in kind, and where to seek tax advice and assistance. Our aim is simple: to empower you with the knowledge to legally reduce your tax bill. In a world where every penny counts, understanding how to maximize your tax savings can make a significant difference to your financial health. By the end of this video, you will be equipped with the knowledge you need to pay less tax in the UK. Your tax code is the key to understanding how much tax you should be paying. Think of your tax code as a secret language between you and the taxman. It's a simple system, really. This code tells your employer or pension provider how much tax-free income you should get before they start deducting tax. So you can see why it's crucial to have the correct tax code. Now, let's break down what a typical tax code looks like. Say we have the code 1257L. The numbers come first, representing your tax-free allowance, the amount of income you can earn before you start paying tax. The number 1257 means you can earn £12,570 tax-free. The letter that comes after the numbers, in this case L, gives additional information. L is the most common letter and means you're entitled to the standard tax-free personal allowance. Other letters you might come across include M and N if you've transferred some of your personal allowance to or from your partner, or T if there are other circumstances affecting your code. But what happens if your tax code is incorrect? Well, you could end up paying too much tax, or worse, too little, and then have to pay back the difference. This usually happens if HM Revenue and Customs, or HMRC for short, aren't aware of changes to your income or benefits. So, how do you check your tax code? It's right there on your payslip, P45 or P60. And if you think it's wrong, don't panic. Reach out to HMRC. They're there to help you get it right. Remember, your tax code is more than just a random collection of numbers and letters. It's a reflection of your financial situation, and it's crucial in determining how much tax you pay. So, take a moment to understand it, check it, and if need be, correct it. Ensure your tax code is correct to avoid overpaying your taxes. The UK government provides tax-free allowances and reliefs that can help reduce your tax bill. This is a crucial statement to remember as we delve into this topic. First, let's talk about the personal allowance. This is a portion of your income that you're not taxed on. For the tax year 2024 to 2025, most people have a personal allowance of £12,570. This means you won't pay tax on the first £12,570 you earn. But remember, your personal allowance might be bigger if you claim marriage or blind person's allowance, or smaller if your income is over £100,000. Speaking of marriage allowance, this is another tax-free relief that can benefit you. If you're married or in a civil partnership and one of you earns less than the personal allowance, you might be able to transfer a portion of that allowance to your partner, reducing their tax bill by up to £250 in the tax year. This is a simple yet effective way to make the most of your combined incomes. Another key relief to consider is pension contributions. When you contribute to a pension scheme, not only are you investing in your future, but you're also reducing your current tax bill. Your contributions are typically taken from your salary before it's taxed, effectively reducing your taxable income. Moreover, if you're a higher or additional rate taxpayer, you can claim back even more through your self-assessment tax return. One final point to remember is that it's your responsibility to claim these allowances and reliefs. The taxman won't automatically apply them for you, so make sure to do your homework and claim what's rightfully yours. In conclusion, utilising these allowances and reliefs can significantly reduce your tax bill. So don't overlook these opportunities. After all, a penny saved is a penny earned. Benefits in kind, also known as perks, can also have tax implications. Now you might be wondering, what exactly are benefits in kind? Well, these are the extra benefits that employees receive from their employment, but are not included in their salary or wages. This could be anything from a company car, private medical insurance, to low-interest loans and even gym memberships. Now here's the crux. These perks are not free from tax. Yes, that's right. The taxman considers these perks as part of your income, and thus they are subject to tax. This tax is usually referred to as benefit-in-kind tax or BIC tax. However, the silver lining here is that the value of these perks, which is used to calculate your tax, might be lower than what you would pay in cash. For instance, let's say your employer provides you with a company car. The tax you would pay on this benefit-in-kind would be based on a percentage of the car's list price, not the actual cost of the car itself. This percentage is determined by the car's CO2 emissions. So choosing a car with lower emissions could lead to lower tax. Another common benefit in kind is private medical insurance. The tax on this perk is calculated based on the cost of the insurance premium. So, if your employer pays £200 for your insurance, that's the value that will be added to your taxable income. The key here is understanding the value of these perks and how they affect your overall tax liability. By choosing the right benefits in kind, you could potentially lower your tax bill. For instance, opting for perks with lower taxable values or those exempt from tax, like certain types of workplace training, could lead to tax savings. Remember, the world of taxes is complex and rules can change. So it's vital to stay informed and seek professional advice if you're unsure about anything. After all, knowledge is power, especially when it comes to taxes. Choosing the right benefits in kind can lead to substantial tax savings. Sometimes the best way to save on tax is to seek professional help. And that's what we're discussing in this section. Tax can be a complex maze, and it's easy to miss out on savings if you don't know the way. That's where tax advisors come in. A tax advisor is a professional with in-depth knowledge of tax law and financial matters. They can help you navigate the tax system, ensuring that you're making the most of your allowances and reliefs, and paying only what you're legally required to. They can also help you plan for the future with strategies to minimize your tax liability in the years to come. But how do they do this? Well, a tax advisor will first get to know your financial situation, your earnings, your expenditures, and your future plans. They'll use this information to identify areas where you could be saving on tax. For example, they might suggest ways to make use of tax-free allowances, or they could identify benefits in kind that you're not currently taking advantage of. They can also help with more complex situations. If you've started a side business, for example, or if you have investments that you're not sure how to handle, a tax advisor can provide invaluable guidance. So, how do you find a reputable tax advisor? One way is to look for professionals who are members of recognized bodies, such as the Chartered Institute of Taxation. They should also have a good track record and positive reviews from clients. And remember, a good tax advisor will always be clear about their fees up front. It's also essential to remember that while tax advisors can provide guidance, the final decision is always yours. They're there to provide advice and options, but you're the one who decides what's best for your financial situation. And yes, hiring a tax advisor does cost money, but consider it an investment. The money you spend on professional advice can often be recouped through the savings you make on your tax bill. Investing in professional tax advice can often save you more money in the long run. So consider reaching out to a tax advisor today. You might be surprised at how much you could save. So as you can see, there are several ways to legally pay less tax in the UK. You've journeyed with us through the maze of tax codes. Understanding them is your first step to saving those precious pounds. We've also delved into the realm of tax-free allowances and reliefs. These are like little gifts from the government, designed to lighten your tax burden. Don't forget about benefits in kind, BK. Choosing the right ones can significantly reduce your taxable income, leading to a smaller tax bill. And lastly, we explored the value of professional tax advice. While it may seem like an extra cost at first, the right advice can lead to substantial savings in the long run. Remember, understanding your tax obligations and rights can help you save money and avoid overpaying tax. It's your money, keep more of it in your pocket.